And this is where it gets interesting. There's evidence that this type of universal ownership is in part responsible for why everything is so expensive these days. For example, they have significant stakes in Nike, Adidas, Lululemon, and Under Armour. If one outperforms the other, it's the same from BlackRock's point of view, and sometimes it can even lose investors' money altogether if companies were to start lowering prices to compete.
That's the universal ownership logic in action, but it's also an anti-competitive logic in action. The fact that all 5 airlines, all the major banks, for example, in the US have the same large shareholders creates a danger and a risk that these corporations will not engage in competition in the same way they would if they each had different shareholders. Because in that world, each shareholder would root for their company and would hope to outperform the market by the company they waged a bet on.
It's sort of like a neo-monopoly where companies don't even have to merge and buy each other anymore because they all send profits to the same guys no matter what. And their large stakes in basically every company affords them friends in high places. From just 2014 to 2015, BlackRock performed over 1,500 private engagements with the companies held in their portfolio. BlackRock reportedly believes that meetings behind closed doors can go further than votes against management, and they typically give management a year before voting against them. They also have a lot of friends in the government. There's a sort of revolving door between BlackRock, the government, and the international bodies that create monetary policy. Things like the US Treasury, Federal Reserve, the central banks of Canada, some European countries, and Sweden, as well as the International Monetary Fund and the World Economic Forum. Since 2004, BlackRock has hired at least 84 former government officials, regulators, and central bankers worldwide.
The intersection of politics and business has never been more ongoing.
Larry Fink himself is on the board of the WEF and even tried to get himself selected as Hillary Clinton's Treasury Secretary in 2016. And in 2008, they got themselves a pretty sweet deal.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it.
In the aftermath, the government created the Financial Stability Oversight Council to oversee entities like BlackRock that control a lot of money but aren't banks. The FSOC pointed to BlackRock as an organization that's so big that its failure could cause another collapse, and tried to put additional oversight on them. But BlackRock doubled their political lobbying spending, including running a super targeted ad campaign on the DC Metro, and managed to dodge the oversight that other large financial institutions receive. And let's come back to that loophole they like to call passivity. The people who decide if they're passive enough to continue not to be overseen by the government is BlackRock themselves.